All right, let's go to the next one here. Let's put it up there on the screen. A really interesting development, which is not a particularly good harbinger. So a couple of things. That headline there is rising interest rates are lifting profits at Bank of America and Wells Fargo. However, the subhead is what we really want to focus on, that the country's largest lenders are increasing their reserves to protect against deteriorating economic conditions after reporting the resilient profits for the end of last year. Effectively, after the banks booked pretty decent profits in 2022, they are holding back a significant amount of capital on their balance sheets because they anticipate customers not paying back their loans. And this isn't just one back, it's multiple. JP Morgan Chase said that they have over $1 billion in reserve more than normal because they are predicting a, quote, mild recession to arrive later this year. The CEO of Bank of America said the exact same comments, quote, mild recession, prospect of the bank that is planning for. Wells Fargo, even after it has been fined for, defrauding customers and all that.
Speaking of con men.
Yeah, speaking of con men, at a much, much bigger level, basically pulling back some of the cash reserves even after having to pay their fines and holding them on the balance sheet. Why does that matter? Because all three of these big banks are saying that they are anticipating major loan losses across 2023, where people will effectively not have enough money, or they're going to lose their job, or based by inflation, based on credit card debt. Basically the runway runs out and they're not going to be able to pay their mortgages. Of course, we all found out in 2008 that can have a cascading runaway effect on the entire U.S. economy. But in a couple of ways, this is almost one of those things which is both a leading indicator, but also which can have its own problems, because whenever banks are not only anticipating that customers are not going to pay back their loans, but then they're also going to hold back some of their cash, what does that mean? It's even harder to get a loan than previously. Right now, good luck getting a mortgage out there. I don't even know why you would want one, because it's like, what, 7% or whatever. But let's say you're one of those people who, now is the time, you're going to do this. Maybe I'll refinance or whatever down the road. The cash reserves, the down payment that the bank may demand on your behalf is going to be probably much higher than it was previously. And the risk assessment on top of that is going to be much more difficult. So I think that in general, getting a car loan, getting a mortgage loan, just the general loans that make our economy run, small business loans, the very basic, the basic architectures of consumer finance for a lot of people, which breed entrepreneurship, venture capital, all of that, and also which businesses can often use to make payroll. I think it's a bad sign of where things could go. Both the fact that they're doing it, but also by doing it itself is going to have problems.
It can manifest exactly the outcome that you fear. And I mean, people are already in a tough position. There's all kinds of metrics about, their bank accounts are being drained. They're having to rely on credit cards more and more. And, interest rates overall going up. So those credit card payments become more and more expensive as well. And then as you're pointing out, as banks pull back, then it becomes harder to sort of like roll over and be able to keep that debt afloat. So people are increasingly in a real bind. And, it's really clear, even as we get these good jobs numbers and you have this really complicated and sort of mixed picture of the economy, wages have not kept up with inflation. So the bottom line is, for most workers, they are earning less and less and less. And that is going to take a hit on people's finances and take a hit on their ability to make purchases and do all the spending and all the things that keep the economy going at its current pace. And then you still have the Fed out there saying, hey, we got to keep going forward with interest rate increases. So it continues to be a really dicey time in terms of the economy. I also thought it was noteworthy. Jamie Dimon, head of Chase, we have been covering a lot of his comments. He had been very sort of outspoken about where he thought the economy was going. And now, as Chase pulls back this, $1 billion, hoarding cash, $1 billion in reserves, he is now being pretty quiet about what he thinks is going to happen, which I thought was also kind of interesting. I'm covering today all of these bankers, probably including Jamie Dimon.
He's always there.
Yeah, I think he's going to be there. Our gathering for the World Economic Forum in Davos. It'd be interesting to see what some of the comments that come out of there as the elites decide how they're going to run the world for this year.
Yeah, and the other thing to consider is that if you're already you're in a precarious situation, if there is debt default, or if there is even talk of debt default, I think this happened last time around. Like our debt was degraded from like AAA plus or whatever to AAA minus. That actually had a whole problem because the other thing is that there are all these automatic investment triggers for pension funds and others where if something does get downgraded below a certain level, then you actually have to automatically sell it because they have deals and contracts. You'll only invest certain types of monies and certain types of government in terms of rated funds. And if the government doesn't do that, it causes an entire mess. The point is that economic precarity is very much on the minds of the nation's top bankers, and because they run the country and especially run the way that people conduct business, I think that's a big problem.
Yeah, that's a great point.
Yeah.
Here we are at a sort of precipice, potentially on edge, and facing down these government crises and possible debt default. It's a scary situation, no doubt about it.
Absolutely.
Hey guys, ready or not, 2024 is fully upon us now, and Saagar and I have been brainstorming ways that we can really up our game for this critical election.
Yeah, we rely on our premium subs to expand our coverage, to add staff, to upgrade the studio. We just want to give you the best independent coverage of this election, which is possible. So if you can help us out, become a premium subscriber today, breakingpoints.com, or the link is down here in the description video. It really means the world to us, and if you like what we're all about, this is the best possible way to keep us 100% independent, working only for you.